welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. If you're here to conduct technical and fundamental analysis, then you are in the right place. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader just like you. Been doing this a very long time. I've done a few things right and I've done a lot of things wrong. And hey, they all add up to experience. I'm a survivor, baby. So ask questions and I'm willing to share the good, the bad, and the ugly with the hopes that you can, I don't know, for lack of a better analogy, stand on the shoulders of a giant, but maybe just stand on the shoulders of a midget. That's fine too. But 20 years is 20 years, so I can share all that I've learned. So let me know how I can help. Ask questions. I love technical analysis. I like to spot, scalp, swing, carry, position trade. I love fundamental analysis of economic data. I love macroeconomics and global money flow. In fact, I have a macroeconomics degree from Harvard. Cool. So we can dive into all of that. Or we could just hang and be currency friends, if you will. I'm okay with all of that. Now, over the years, people have asked me, Wayne, can you do this for me? Wayne, can you do a training course? Wayne, can you write a book? Can you do this? Can you do that? So if you look in the description below this video, you will see a link to my book. You will see a link to free training courses. Marina says, it's Tuesday. Thumbnail? What? There's a weird thumbnail? What does it say, Monday? I don't know what's going on. What? I have to check. Yeah, there is oh, I see. I see what's happened. Yeah, I'll update that. Thank you, Marina. So a link to my book is in the description below. A link to tradersway.com, which is a trustworthy, ethical, high-quality boutique foreign exchange trading firm. That link is in the description below. A link to my chart templates. A link to free training videos on the FX Bootcamp YouTube channel. A link to paid content, which is $88 to have 65 hours of fxbootcamp.com training videos. Yes, 65 hours for 88 bucks. Seems reasonable, seems pretty fair. No reason to not check that out. So cool. So yeah, let me know how I can help. Like I said, every single one of us is going to need a broker, and I believe you need one that's better than just cheap spreads. Because that's just cheap advertising when somebody says, we're cheapest. We have the cheapest spread on euro dollar. Those are all weird, low end actually, advertising gimmicks. Ultimately, what you need, you don't want to overpay, right? You want competitive spreads, but you also want fast execution speed. You want to get paid your full swap, but you also want to partner with a business, and that's really what working with a broker is. You're partnering. They're your execution partner. You want one that's trustworthy and ethical. Put that in an ad, hey? But nonetheless, tradersway.com, that link is in the description below. So let's move over to the live charts, and then let me fix the headline. Thank you for that, Marina. Yeah, there's a little bit of a glitch today. So let's see, it's Tuesday. It is the 15th, though, isn't it? It is the 15th. It's not part 2. Little glitch in the matrix. Cool. All right, I got that fixed. Cool. Thank you for that. Okay. Oh, that coffee's good. I made a mistake with my ordering of Nespresso, so I have I have hundreds and hundreds of Nespresso capsules. Like, my wife's like, you should probably turn that subscription off. I'm like, yeah, you think? And I have boxes and boxes of Bullet Coffee creamer. I'm like, oh my God, I got to turn some of this off. So anyways, I got lots of coffee. I'll share with you if you want some good coffee. All right, so we got some biddy going on. I got some biddy action, actually. So I'm going to watch this a little today. Let's just say I would like some up from here. And I know we're sort of in the middle of nowhere at the moment. Gotcha. Roger that. Okay. But I'm hoping for more up than down. Now, yesterday, maybe it was in my day trading group, I said, hey, bring your own canary because you need to climb down into the coal mine. You know, this is one of my canaries, if you will. I'm using Bitcoin to try to discern the market's sentiment in regards to risk. So Bitcoin down is risk off, Bitcoin up is risk on. And you can see there's a little bit of a decline right now, but we'll see how this new market opens up. Okay. You know, and I would say the markets were mostly off yesterday. Wasn't only China took a bloodbath, but you know, it wasn't risk on in other markets either. So we'll see. It'll be interesting what happens next today. Okay, commodities are through our main levels of support here. If you remember, you know, two plans that I had talked about earlier. I thought this would go up first and then down. Okay. So now I'm in this situation where it went down, so I have to have it come up. And this is really, you know, I guess I missed the bus, and now I feel like you have to run down the street to catch the bus, and I don't like doing that. So, yeah, I'm out of position on this, and a lot of things actually. I just thought I would just have had a different trade plan than what happened. I was thinking up and then, down and then maybe a break and then whatever. So this was just more down from this big high. So I didn't have a setup for that one. Okay. I don't know if that was bad. I don't know if I made a mistake, but nonetheless, it's just down. And so now I got to be careful. So crude is down, and that brought down Kitty CAD, for example. You look at gold. Let's do this out to an hour, okay? Maybe even 4 hour. Okay. Gold came down to support and just kept falling. Once again, I kind of thought, a little higher and then a little lower, and instead it just opened down and kept falling. Not the way I set it up. I don't really care about it falling. The thing is, I guess, I don't know. I missed it, right? I understood this. I just thought there'd be more of a fight. I was concerned over the weekend of maybe more potentially negative headlines out of the Russian-Ukraine situation. And I thought maybe there could be a pop and then a bigger move down versus just straight down. Well, got that one wrong too. So interesting. It's one of these situations where the moves are excuse me. The moves are straighter than I had thought. Also going into this week, and everybody in the day trading group and swing trading group can confirm this, that I'm going into this week, and I explained that I was going into this week, conservative and a little bit neutral because of all the event risk this week, in particular tomorrow. There's a lot of event risk tomorrow, not just the Fed meeting. There's more than that going on. So, now that I didn't quite get the sell high idea, and I had to kind of sell it low, which I don't like to do. I've missed it, but now I'd have to be aggressive to get in, but I'm not aggressive. That's the thing. Okay. So, that's that. So you mark all these things up. I had that down there. There's this one here. Okay. And there might be a little one in here. Okay. Around 19. So, wait. You got to wait, right? Richard's like, the market's response to the war is coming to a resolution. I'm not sure what you're saying. Are you saying the war is coming to a resolution? Or, yeah, I'm not sure what you're saying. I think the biggest thing, kind of going back to Richard's comment, because he said the market's response. So that would be the topic, right? Not the war coming to a resolution. So anyways, I think, and I'm going along with that, it's more market than the war. I think the biggest thing that occurred, and I saw it, I was watching this chart on a 5-minute chart. I saw it and I knew it was important, but I didn't give it enough credence. I knew it was important, but I thought the war was more important. So right here, we hit parity and I was short and I jammed my stop at plus 150 pips. And I know that that's parity. I understand, and I understand its importance, and I understood what was going on here. I thought it would probably do a lot more stuff like this, because I thought the war would keep coming back, and there would be more risk off, and then there'd be a breather, and then more war, and then a little war, I just thought we would have a lot more sideways. Okay. And so I was always kind of like, maybe around here there's a sell, and maybe around here there's a sell, and maybe around here there was a sell, and maybe around, and not just particularly this pair, but all the euro pairs. And now in hindsight, because that's so wonderful, right? Now with the hindsight of everything, right? Like, again, I kind of thought this would happen this way this week. Never did. But then I look all the way back, and it was a week ago at probably 9 o'clock at night. I'm sucking on a cigar and a coffee at 9 o'clock at night, and I'm like, I should probably get out of this. Turned out to be a smart move. But the second thing is, gee whiz, I wish I would have. I wish I would have just stopped and reversed and said, that's it. We hit parity or something like that. Now, there's some other really interesting clues going on here with a lot of euro pairs. Like this was an exit zone. I don't even remember if this pair, but a lot of different pairs. So like there were lots of clues. But at that time, this was way more fundamental than it was technical, and we overshot a lot of our targets. So to have it stop and reverse it's interesting. Anyways, it's interesting. And boy, I wish I would have just said, you know what? All this downward awesomeness is come to an end and it's going to stop and reverse. But of course, I wouldn't have known that. And that's too bad. Too bad, so sad. What do you mean by hitting parity? See the price here? Euro and Swissy are equal. 1 euro is equal to 1 Swiss franc. That's what that red line is. Parity. Okay? And, okay, it's a big deal. Oops, I tried to get that. Let's do it this way. It's a big deal and big enough to get me out of some good trades. But I thought it would be tested multiple times. Okay? Richard says, have you ever heard of something called fundamental support and resistance? It probably is the basis of a book and a training course. And ultimately, if they're saying it's fundamental, it's probably more seasonal than fundamental, but then you could argue seasonality is fundamental. So whatever, I guess is what I'm saying. Okay. Okay. So, wowzer. What an interesting couple of weeks, huh? Yeah. Good. Good. So oil under $100 a barrel, gold under $2,000 an ounce. Everything should be right as rain. Tomorrow is a big day. Okay. And I'm not going to purport that I know what's happening. I know what's happening. That I know how the market's going to respond. So you're going to have to use your own analysis for that. Okay. So I'm not going to tell you what to do tomorrow. I have some guesses and hunches, but that's not good enough. And in fact, my guesses and hunches are usually wrong. So you manage your risk. That's all I can tell you, right? This is important, man. You got to put your big girl panties on and deal with the risk. So right now, we have this lower low, lower high. I did this on Sunday, and we're just now on Tuesday, kind of in that zone. If you are a bear, you have your opportunity to sell. Okay, you guys see that? If you are a bear, okay, you have your opportunity to sell. What? Bank of England has an interest rate decision this week. It could be good, it could be bad, it could be ugly. Typically, we don't overshoot pivots like this, but this is not a typical week or month, of course. Right, Frantic? Cool. So anyways, do our job here. Mark prices, right? Leave yourself some love notes for the future. See how they come together. Richard says 2 strong countries. Yeah, but that dollar doesn't necessarily need to stay strong. Okay, Aussie went up, hit target, made a lower high, dropped like a ton of bricks, and we're back into an old buy zone. So there's some hope here, but technically, okay, all of this, right? Technically, there's a lot going on here. And this is more spiritual, if you will, to go back to the top. Okay. Now, I really usually consider this neutral. Like if you're a bull, this is a massive buy, and this is where bulls get out. Okay? And when you get here, what I say in my book, you got to remember I wrote it, I don't know, 15 years ago, right? In my book, in this situation, what do I say? Back to the central pivot point. How many people here can confirm that? That in the book or the training courses, in this model right here, we say it's going to return back to that central pivot point. How many people here can confirm that? Okay. So now that it's done it, I don't know what's next. Okay. Okay. So, okay. So you go back to whatever fundamental play you think is going to happen. And really what you're thinking about is not even this week, but maybe next quarter. Okay. By the way, isn't it cool that you have this common knowledge now where you see this and you think we're going here? Cool. Awesome. Cool. Thank goodness, huh? Yeah. So anyways, now what? Well, that depends on what your point of view is. There's all kinds of interesting things that could happen here. For example, we could head all the way down. This downward momentum could continue. And if that happens, then what? Okay. See? Neat, right? Coolio. I think what we really need to do is look at sort of the conservative range, okay, and look for breakouts of this range. So I'd look at that as one range, and then I'd look at this maybe as sort of the bigger range, okay? And those are your, okay, you could look at those as pivot points, okay? Now, why does that range, if we measure open, high, low, and close for pivot points, why do they not overlap with actual pivot points? And that's the interesting thing about pivot points, I think. They're not averages. There's a weighted mean in the calculation. So it's trying to take your averages and then trend them. So it says, okay, we're looking at sort of lows and highs and all these different things. And what it's saying is if you are a bull, okay, then you're going to look at this differently, your thinking trend, and you can see it visually by looking at that weighted mean with this new weighted mean for next month. This is April, but April's not set in stone yet. But right now it's saying, look, we've made a higher high, and if we maintain not having a higher low, then the next month we'll also make a higher high, raising all the targets. And you see all of a sudden this bottom is here and this high is here, but you got to raise this bottom and lift this top so it trends. And that's what the monthly pivot points are doing. So right now, the April aggressive target is 75.5 if you're a bull. And it's not just looking at this, which I'm doing here. I'm saying, okay, there's an inside range. Okay, there's an outside range out here, right? Bottom, top, middle, And then pivot points raise the whole thing up a notch. I think that's really cool. Oh, Thiago read the RBA statement. Thank you, Thiago, for doing your job. Thank you, Arve, for posting the PPI. Can you post the year over year, not the month over month? Kareem's checking in from France. Thank you. That's what people are looking at. So Richard says the commodity rally is over. Okay. Also, like fundamentally, Richard, I guess, is bearish on Aussie. Well, the first thing to look at is technically, this is supportive. It's bullish to neutral. So now you're a bear on Aussie. All right. So how you would put this together, Richard, is you'd look for a sell up in here. Okay. Or you'd look for a sell way up in here, right? There's three places. Okay. You'd do this, you'd do that, and you would do that. Okay. Which means gold is not going to go any higher. Okay. That means you believe we're not going to see $2,000 an ounce for a while, if ever. Okay. All right. I think, I think right now it's also getting punished based on more Chinese closures. So Shenzhen got shut down. By the way, Shenzhen's a great city. It's big, of course, like most Chinese cities. But it's a big, cool place, and it's shut down. It's right across the water from Hong Kong. So you got a Hong Kong, which is an island, and then Shenzhen is across from that. And there's a lot of manufacturing there because it's, on the water. Guangzhou's not far by. Guangzhou's at the mouth of the Pearl River. So that whole region, so think of like Hong Kong, Shenzhen, Guangzhou, all kind of being one big giant metropolis. And that's getting shut down. That's bad for business, obviously. And so that could negatively impact Australia. Also, people are expecting the Bank of China, the People's Bank of China, to step in and stimulate the economy, and that just may not be happening. So if you're going to argue with, that way, Richard, then I get it, right? Yeah, Shenzhen's nice. I like Shenzhen, for example. I stayed at the Ritz-Carlton in Shenzhen, and it probably had the best service. Certainly one of the top 5 best service from a hotel I've ever had. Just wonderful, amazing quality of service. The hotel was nice, of course, and the food was great. Okay. The only part is they didn't have Cuban cigars because it's an American company, and I'm like, what? No Cuban cigars, but like right across the street they had this huge park where you could walk. But one interesting part of the park is many of the buildings around the park had a park on top of the buildings. So you could walk on top of the buildings, and it was a beautiful green park with trees and everything on top of buildings, which was really neat. So, I mean, it's just a nice city. Mark's like, why are they shutting it down? COVID. Burns says, did it have EU toilets? I guess so. Well, you know, when you're staying at like $2,000 a night hotels, they have nice toilets. I'm just saying. I don't know. I don't know about other places. All right. Yeah, I was trying to think of the hotel room. I think that was the hotel room where my bed was big enough for 4 people. It was double the size of a king bed, which was funny. Like literally, it was like if you were a cowboy, there's enough room for you and your horse. Like it was really crazy. You're like, where do they get sheets for this thing? It was pretty funny. Like the biggest bed I've ever slept in. All right. So anyways, all right, take a look at this. Hey, I'm not an American, Richard. By the way, that's just funny though too. You didn't think Americans were allowed in the country? I mean, I don't know what you think of China. Like, there's a big, like, I don't know. Yeah, most people have. I don't know. It's great, dude. You should go to China, and everyone's welcome in China. There's not like, like it's communist soldiers walking around forcing Americans into prisons and stuff. China's great. Infrastructure is wonderful. Everything is modern and clean. Now, I had been there 20 years ago, and I remember being in Japan first. So I'm in Tokyo, and of course, everything's modern and clean. Actually, Japan was getting a little bit old, but everything is organized and clean as you would expect. And then I got to China, and it was filthy and dirty and disgusting, right? And you're like, oh my God, 1 hour flight, and then the whole world is different. But now you go and everything, the infrastructure is fantastic wherever you go in China, right? Just great. Okay. Yeah, I got it, Donnie. Okay. Yeah, China is fantastic, and almost scary because of the competition. So I was there, I don't remember now. One of my trips there, I was part of a business envoy. I had lunch with the governor of Sichuan province. I had lunch with the mayor of Chengdu, which is a big city out west. I was invited into the People's Hall of China. So basically, I got to sit with the Chinese Congress while they were in session as an international diplomat. I was the guy, with the earpiece on, listening to the translators. And I was able to walk around. I've done press conferences with Chinese media, both TV and newspapers. I've done speeches and presentations. And that, excuse me, that was far enough back where I went from the old China to sort of the next part of China where around those hotels and stuff that I stayed in places like Beijing, they had just knocked down entire neighborhoods, right? So I've been there the one time where it was sort of modern and old, but mostly old with some nice hotels and nice conference centers. Then I went back again and visited all over the country. All right. And it was now becoming modern. So entire neighborhoods of Beijing were gone and just flat. And then your beautiful hotel. And you can look out your window and there was just an entire neighborhood missing, right? And then you fly to Chengdu and the entire city had been leveled and rebuilt and completely organized, right? And then you go back again. So another 5-10 years goes by and you go back and now everything is modern. And I don't care where you are. So I've been to Beijing, Chengdu, Shanghai, Shenzhen, Guangzhou, Hong Kong, right? Maybe more. And it's just, it's amazing. Everything is just amazing. And then you go to a place like Boston and take the subway in Boston, and it's old and dirty and dangerous, right? But you know like I was saying too, it's interesting because you go to Japan and it's a little bit old. You go to Singapore, it's a little bit old, right? Because they were modern 20 years ago, and it's really interesting. We'll see how China, so it's been sort of 20 years. And in China, what they're doing now is 20-year-old skyscrapers. They're tearing them down to build new ones because 20 years old or 25 years old is old for China. But anyways, check it out. China's a great place. I think one of the best educations to have is traveling around the world and meeting people. I'm not one of these guys like you go on vacation, then you get on a tour bus and you look around and stuff like that. I've rarely done that in my life. Most of the time, it's business, right? Most of the time it's business, and you get to see it from a different point of view because you're meeting locals and stuff like that. It's a great way to see the world. So when you see things happen in South Korea, it's good to say, I remember South Korea. I remember meeting people. So I was hired by the South Korean government, and I consulted on building the venture capital sort of model and investing into their high-tech startups back in 2001, maybe, I guess. And so I got to meet some government officials. I got to meet some sort of NGO type people, met a lot of high-tech startup CEOs, visited multiple of their incubators and in different cities of South Korea. So you get to see it. It's just really fantastic. Especially if you're a foreign exchange trader, because now you know what you're buying or selling. Okay, just checking up on this. So I have this as a marking point. You can see that we broke through it and are holding. So the next one is just above us. And that would be your decision for now. Are you a buyer or are you a seller? Okay. And buying this dip on the open would lead you to making a higher high. So you're saying you're going from 110, let's say to 111. What do you think about that, Altum? Is there a name? Utum? So that's your big decision in the moment. Okay. This is the open. This is the bottom right now. You see? Oh, different color. You see this? This is the bottom of the New York Open. So you need to be making your decision of whether you're a buyer for the open or not. Okay. Okay. Are you going to breach 110 or not? If you are a bear and you believe we're not going to break through, you also need to get ready to do something. Okay, your opportunity to sell is probably coming up pretty close, huh? Neat little 1, 2, 3 here at the Asia Open. Back to the 15 European Open. Although it doesn't look like that's timed quite right, but I just made it, noob trader, so don't get caught on that. What you should be focused on, noob trader, is doing what this kind of indicator is doing. It's just training wheels for me to show you, but it's basic price action where you watch a bottom, makes a higher high, watch a bottom, makes a higher high, watch a bottom. You're just marking these bottoms. You're supposed to be doing that anyways. And you say, well, why don't I just have a template do it? Because then you don't know what you're doing. Okay. So for example, this is a pretty straightforward trade for a bull. Okay. This is what you're trying for in the New York session. Okay. So now we're testing that 110. It's up to you. All right, let's go look at some pound trades, see what's going on here. Okay, we're at a testy zone. Testy. Looks like Kiwi is starting to chip away at pound. Say, right? Pound Swissy, Oscar Mike. Okay, so we can look at that. Pound Swissy is definitely waking up. Let me get rid of this because it's, I want to get rid of that. Wait. Okay, so I have this marked here as you can see I have this marked here multiple times, in fact, as a roll reversal. So that kicked. We're Oscar Mike now. My trade is right here. Okay. So I can get rid of this stuff now. Irrelevant. So I'm long at 122. Actually lower than that, but we'll say 122. And we're at, so I'm up about 75, 80 pips. Helping the poor Swiss. Yep. Joe says, do you use Trader's Way as a broker? This is Trader's Way. Trader's Way live. Okay. Not a lot of money in it. Let's see. I have 2,300 in profit and about 36,000 in the account. Okay, so anyways, that's just going up to the next level of testing. Okay. Pound Aussie's in an interesting place if it wants to roll over. M2 to M4 has been fulfilled, but a bull is probably going to let it come back and then take it up that way. Okay. Okay. What do you think? Okay. This is sort of the same thing. If pound Aussie is going to do what I just wrote down, then this would make either this, which I predicted or drew like, I don't know, days ago. This one could also do that. Okay. And beast. Okay. I already have this marked. Big drop on the beast, and all it did was bounce on that 4H21 roll reversal. So looking at it on a smaller time frame, my line in the sand were ain't no joke. All time frames, Utam. Right? Fractal geometry. So Utam will start either a 4-hour or a daily to do strategy, and then let's say 15-minute or 5 for tactics. Strategy always comes first. Okay? So the reason I do things like this, where I highlight this area, is for a bull to buy a dip on a roll reversal. That came and has left. And now their plan is this. Do we know that that's going to happen? No, but that's what that strategic plan is, and they tactically entered at the right price. Okay? So somebody bought that at 153. Gotcha. What's their goal? Their target is probably 157, 158. How many pips for a stop loss? Well, it depends on the type of trading that you're doing, Abdullah. So if you are doing a basic day trade, our typical scenario is 33 pips stop. Okay. With a 99 exit. That'd be pretty typical. Standard operating procedure. Okay, for a day trade. Okay, yeah. Now remember, like all the questions you guys, several people have been asking, you're asking good questions in a normal market. Today and tomorrow, and probably the rest of the week, is not normal. Incredibly abnormal. So don't take what I'm saying today as the gospel for today. Meaning you ask me, what's your normal stop? How do you do this? What about that? Okay, all of that is based on standard operating procedure, and we have an abnormal market, which means standard operating procedures are going to be less optimal. You need to be incredibly careful today, tomorrow, and Thursday. Okay? Incredibly careful. All right, so what do you guys think about this? What do you think? Now, why do you only use a 15 pip stop, Abdullah? Okay, so you're scalping gold. Why not do more? Why so small? Yeah, but okay, and you risk 15 plus your spread, so you're basically doing two things. You're doing 1-for-1 risk reward, and you make very little money. Why? And by the way, I don't care if you're doing one mini lot or 1,000 full or 1,000 full lots. I don't care if you're doing $1 million, $1 billion. Okay. Okay, now that is much more interesting. So you leave something there. The 20 pips profit sounds terrible to me. Your small stop seems, yeah, I mean, we can have discussions over that. Okay. But the part I do like is leave the runner. Okay. But then I don't understand where you're like, you take a 20 pip profit, but then you leave a runner. So what are you doing? You're putting down, let's say 2 lots. You take profit on one and you let the other run. So you're trying to basically, it's your form of going break even. Yeah, okay. The next thing is your 20% a month on that. Doesn't sound right to me. And it explains why you only have a 15 pip stop, because you are over leveraged. So I'd caution you there. Well, Byrne says you get killed on fees and spread. Not if you're letting the winner run. Okay. No, I know what you're saying, Abdullah, but you're almost by definition over leveraged. So, I mean, okay. So that could be tweaked, but I understand what you're doing. I'm not here to knock you down. I'm not saying I'm better, but I do believe, based on your small stop, I sense that you were over leveraged, and then you're like, well, I'll let my winner run and make 20% for the month, which tells me you're way over leveraged, right? And it all makes sense. It all makes sense. I think you could improve. Okay, so once again, we're at neutral here. This is the counter trend. Okay. Again, I could have played this differently. It's all great in hindsight. Very often I get, when you get a fundamental move, I lose conviction for the technicals, because I'm such a technical trader that I've had experience where you trade it technically in a fundamental move and you get blindsided. So you're like, so anyways, would have liked to have maybe traded this different, but nonetheless, we're at neutrality here. Okay. And I'm waiting for the big moment in time. And it's interesting that we're going from these extremes to extremes, and now we're at these neutral points right before the big risk event. So it all kind of makes sense, right? It all kind of makes sense. Got to get through this week, and then I'll be very interested in what's going to happen next. Okay. Euro CAD, that's a big move to the down, Z. Okay. So mark your lines. Where are the more interesting levels of support, or are you trading this down this way? Okay, you want to go back. You want to look at commodities. And CAD getting strong, and oil just maybe thinking about it. I think it's a bit early for the buying CAD, but we'll see. Because for CAD to get strong, you kind of want this to go up, right? And it doesn't say up on a 15. Joe says, why do I use $33.99? That's just for day trading. Okay, so think of it. Your 33 is probably 33% of your ADR, and your take profit is 100% of your ADR, 3-to-1 risk reward ratio. But I tend to only day trade in the direction of an existing trend. So once there's an existing trend, then using a $33.99 OCO is probably the right thing. So let's see if I can change this template a little bit. We can do day trading, bearish bias, for example. Okay. And a day trader, this is just my day trading template. Okay. This is a sell. Hang on, I gotta refresh this. Okay, we'll go back to a 15. Where's the target on that? Oh, it's way down there. Let me add the conservative target. Hang on. Biased pivots. True. Okay, this now has the conservative target. All right. So using my day trading template, okay, sell. These are the sell prices. Okay. And so a typical scenario, right, is let's say that 67. Okay. So what is that? 114.67. Hang on. Anyways, this is the target actually isn't based on the 99 OCO. That's a standard operating procedure to start with that. But anyways, the target. So let me redraw this. Based on sort of the volatility at the moment, that's the conservative target for that day. Okay, this is the conservative target for that day. And we'll go the right. This ends up being the same trade, and then this is the conservative target for that day. That's the aggressive. This is the conservative. Okay, you can see there's also an aggressive and an aggressive. So it's this combination of you should have at least a 3-to-1 risk reward ratio. Okay, Joe? Right? If 3-to-1 doesn't give you, if you can't get a 3-to-1, it's really a piss poor day trade. You're really scalping. Maybe, I mean, yeah, it's an intraday trade scalp. Like if it's not worth 100 pips, for crying out loud, it's embarrassing. Okay. Okay. Now these are big moves, but nonetheless, right? What's the difference between WTI and Brent? Brent comes from North Sea oil. Okay. That's Brent. And sometimes you'll hear it called like the international benchmark for oil. WTI is West Texas Intermediate, which is a type of oil. Intermediate. Okay. So WTI is American oil, and Brent is North Sea oil. Brent is better quality? I'm not entirely sure about that. Yeah. Yeah, these are just biased pivots. Okay. The reason I created bias pivots is having worked with, thousands of amateur traders, I say, hey, here are daily pivots, and I teach you how to trade them. And I say, if you're a bear, you sell there, or you sell there. And if you're a bear, you're going to look to sell here tomorrow. And then I find out an amateur trader is thinking both all the time. And they haven't. And then I find out, wait, are you a bull or a bear? And they're like, I don't know. I don't know. Right? They're like, your course says buy M3, so I did. I'm like, no, that's not what it says. I said in a downtrend, you sell here and exit. And then you sell here and then you exit. And then next week's trade plan is that. And what an amateur trader is, they get it all gobbledygook mixed up, and they're doing both things all the time. And you get very mixed results all the time, which means you suck. Okay? So instead, I changed things. Okay? And so we'll go back to the template here. So where's the day trading? Day trading, bearish bias. So one of the things I did here is I said, all right, to use this indicator, you are forced to tell it what your bias is. Are you a bear? This is set for bearish mode. Or are you a bull? That's bullish mode. And if you're a bull, it sets up the bullish trade plan. Richard says, do you think OPEC's selling? Actually, OPEC is releasing a report today. Did you guys download it yet? I don't think it's out yet. Later today. The latest, but that's February. But does the March one come out? Tuesday, March 15th. That's today. So it's either this one, I have to double check, or it's coming out today. It might actually be this one, but. All right, but anyways, do you see the value of this? You have to aim before you even have a plan. You have to have a goal before you even look to trade. So if you were a bull during these days, okay, you had permission to buy in here, and it didn't work out. You had permission to buy in here, and it didn't work out. You never had an opportunity here. maybe you tried to do a front run here, but I don't know why you'd try to front run in a falling market. And so you're looking at all this and there's like, maybe you took that, maybe you took that, you don't take that, you don't take that, you don't take that. And you are consistently not trading this because you're a bull. At some point, it'll pop up and you'll catch the next dip and you're Oscar Mike on the move. But not until the market has changed. So I force you to do that with this template, and it's really good. So you can say, well, Wayne, I'm not a bull, I'm a bear. Okay, so you opened your indicator, opened your bias pivot, change it to bearish mode, and now it only gives you bearish trade plans. It gives you the entry, okay, sell at 103.86, and exit down here. See, you see that? Bearish profit zone aggressive. So your trade plan for today on WTI using this template is sell at 103, is it 49? So 103.5, exit 95.58. Boom. In, out, done. And it's 9 o'clock in the morning. Burn says, hey, sorry, I had that turned around. WTI is better because it has less sulfur. Right. So there's two things, right? You want to look at, is it light or heavy? Is it sweet or is it sour? Okay, those are the things you want to look at. So light, sweet is good. So think like Nigeria. And if you want to know the sort of the practical difference, if you drill an oil well, oil well in Saudi Arabia, not South Africa, Saudi Arabia, and you're standing there and they're drilling and they hit oil. Do you know what happens? You die. Poisonous gases come up out of the ground and you die. It's sour. And you're dead. You just inhaled 1,000,000 times more poisonous gas than your body can handle and you're dead. Okay? If it was sweet, that wouldn't happen. Okay? Nigerian oil is light and sweet. It's beautiful. It's clean. Okay? You go to Venezuela and it's heavy. And it looks like swamp mud. Think of it as being like closer to tar than jet fuel. It's thick. It's literally heavy. It's clumpy and nasty. Okay? They literally suck it out of a swamp. So it needs to be refined. Okay? I don't think it's sour, though. I think it's just heavy, muddy, ugly, nasty oil. But so is oil from northern Canada, right? From Fort McMurray, it's intertwined with dirt, so they have to squeeze the oil out of the dirt, out of the sand, and it's tar sands. So it's heavy, thick, dirty oil that then needs to be refined, right? Versus maybe something that's come out of a pump jack sucked out of a well, it's going to have a lot of gases in there, like natural gas, but it might be just more fluid versus, when we're talking about heavy versus light, we're talking about viscosity. Okay. So there's quite a bit of difference. There isn't such thing as just oil. Okay. Now the big thing about Brent too is you have to build a rig over, I don't know, a mile of ocean, cold, stormy seas, and just drill. You got to get the drill bit a mile or maybe 2 miles below just to get to the seafloor, and then you got to drill below there. And in lots of parts of the ocean, you have like, okay, you have water here, and then you have sort of a continent, and then you have another continent, right? So let's change this. So this is land. We'll make that land, and we make this land, and we make this water, okay? And very often what happens is there's salt from the seawater, and the salt starts forming down here over millions of years, right? Because water is kind of running this way down the continents to the bottom of the ocean and all that kind of stuff. And salt collects here. And then what happens is the oil gets caught under the salt. So now you got to drill to the ocean floor, and then you got to get through the salt. No. Because the salt acts like a filter. And then, right? And then it comes down and hits bedrock, and all that oil gets caught on the bedrock and gets filtered through the salt and just sits there in a big pool. Peter says the North Sea is shallow. Okay. Yeah, I guess that kind of makes sense. All right. It's a shallow sea. Okay. But nonetheless, you got to get through the water. Then you got to get probably. So like what they found off the coast of Brazil is there's a big crack between South American continent and the African continent, and it's closer to Brazil than it is to Africa. And then there's this huge layer of salt. And salt's not that easy to drill through, by the way. But nonetheless, if you can get through there, there's oil. And Brazil might have one of the largest oil deposits known on the planet. It's just way out at sea and way below the water, and then way below a thick level of salt. And then below that is almost unlimited oil, because what happens is the oil slowly moves towards the crack and then goes through the salty filter and then collects in this giant underground undersalt pool of oil. It's just there, just naturally collected because of gravity and maybe the rotation of the earth or whatnot. So Brazil at one time was thinking of building a floating city with hospitals and houses and schools for the children, and of course all for the oil workers, and that they could just drill down there and suck that oil out. And it's enough to turn Brazil from a third world country into a first world country. Or so the argument goes, because, well, that could have happened to Venezuela. The thing is, Venezuela was blessed with more oil than Saudi Arabia, and for some reason went from poor to even poorer. It's kind of strange for like Venezuela to be poor. It's kind of strange for Russia and Ukraine to be poor. even though they're blessed with almost unlimited natural resources. They should be incredibly rich. Argentina used to be in the top 10 richest countries in the world. Then they became socialist pig dogs, and now they're one of the poorest countries in the world. Yet they're blessed with natural resources. It's terrible. Now, Robin brings up Norway. Norway looked at all of this. It's called the natural resource curse. And Norway, so I studied the Norwegian Sovereign Wealth Fund. Okay. And yeah, they're quite different. Yeah, it's weird, right, Abdullah? Right? So you look at like, well, Libya has oil, poor. Right? Iran has oil, poor. Iraq has oil, poor. Saudi Arabia, hey, they're rich. But then if you look at the average Saudi, 25-year-old male, he's probably not rich. Okay? But they also have a lot of oil. So, right? But you go through a lot of the OPEC countries and you're like, dude, these guys are not rich at all. Okay? Not rich at all, yet they have been blessed with natural resources. But then you look at like Russia, it has more than just oil, even though that's 60% of its GDP, but it has unlimited everything, but has an economy smaller than Italy when it was doing well. So 6 months ago, Italy was bigger than Russia as far as GDP, and Italian GDP ain't that great. Right? So, amazing, I think. Just amazing. So, there's a bit of a curse to having free money. What happens is you tend not to want to work. You don't care about things like productivity. You're just like, I just buy the yacht anyways. I just have money. It doesn't matter. Just buy it. Just buy it. Whatever. Just buy it. I want another yacht. I want a bigger yacht. I want 5 yachts. I want 20 yachts. If you can buy 3, why not 20? Right? Well, it's socialism, Abdullah. It doesn't work. It's unnatural. It's unholy. Okay, anyway, so we're sitting here on Biddy, and of course, we're just in that opening zone, and you need to do what you want to do. If you're a bull, you're buying this low. Let me get rid of this. And that you got your low here. Now, it doesn't mean it won't go lower. It's just if you're a bull, this is an area in which you wake up and get interested based on the open. Bears have already taken off the top, and now we're in this zone, and you're either, trade it as it moves up or you trade it as it goes down. Pete says 300 feet, huh? 350, 400 feet maybe? North Sea? Yeah. Yeah, that ain't bad, I suppose, huh? So what time is it? Jeez, I can't get my watch out. I got to start wearing small watches. I can't get my watch out. Oh my God, I cannot even get my sleeve. Jesus Christ. I got to start wearing small watches. Yeah, stock market's opening in a few minutes. I think I'm going to go so I can go do some trading. I don't even know. Do they even make small watches anymore? I don't even know what to buy for a small watch. I guess I got to find my Cartier. That's probably what I got to move to. Okay. What Bitcoin fundamentals? Up if you're risk on, down if you're risk off. I have some cash on Bitcoin right now, and I need an up day. Okay. Richard doesn't understand Bitcoin. We were having a day trading group discussion, and we were talking about maybe putting together a course on cryptocurrency, just sort of a generalized idea of, what is Bitcoin, what is Ethereum, what are, altcoins, what are stable coins, what are smart contracts, what are some of the applications being built on various like chains, and maybe the future of chains and multi-chains. And then I think people wanted a couple of discussions on mining and buying ASIC or GPU machines, and how does that fit into the blockchain and the block. And I would call it a general overview, but maybe like an 8-hour overview of crypto, and maybe put that into FX Bootcamp. So maybe this summer we can do a cryptocurrency course. And see if you guys are into that. What do you guys think? Summer school on cryptocurrency? Now, my cryptocurrency course I took at MIT, and Gary Gensler, who now is he's the former head of the National Futures Association and is currently the head of the Securities and Exchange Commission, will be literally, it was funny. 2 weeks before Gary Gensler took over the Securities and Exchange Commission, he was my teacher at MIT. Isn't that funny? Like literally, he wrapped up my course and then took over the SEC. And what was the first thing he did being in charge of the Securities and Exchange Commission? He wants to regulate cryptocurrency. And I'm sure I said, hey, GG, you should probably take over the SEC and then regulate cryptocurrency. And he's like, Mr. McDonald, I think you're right. I think I should do that. I'm like, go get him, GG. And he did. So it's all about me. So you're welcome. Okay. So anyways, if you guys are interested in a cryptocurrency course, we can put something together. And it'll be cheaper than MIT. If that's all right. Okay. So what do you guys think? Should I start putting together thoughts on a crypto summer school? Yeah. Peter, but he's like, but he'll lose the case against Ripple. Okay, well, that would be interesting, right? Yeah. Well, I think I paid like $5,000 for my course. So, like I said, we'll keep it cheap, like maybe 4,000, or maybe a change for sorghum. Lucas will dump some sorghum on my driveway. He's like, there you go, man. All the sorghum you can eat. I'm like, I don't even know what to do with this stuff. Yeah. As much as you need. How much would I need? About, you know? Yeah, Jim's like, only 4 payments of it. It'd be great, right? Sort of like, hey, how much for that BMW? Oh, 72 payments of just $620. Oh, I can afford that. I'm like, dude, did you understand that 72 payments? If you got to break down the 72 payments, you can't afford that BMW, right? But anyways. So, yeah. Matchmaker says the full course is on YouTube for free, 23 hours in total. I believe that's a different course, but nonetheless, it doesn't matter. So, yeah, doesn't matter. That's a different one, although I can look it up because there's open courseware and stuff. But if you're talking about the one with Gary Gensler and stuff like that, well, I guess the difference is there it is on that. Okay. I got the certificate on the wall, which says I can pay $5,000 to take a course. Yeah, but it's still open course learning. Sure. Yeah. Yeah. So anyways, jeez. I think I'm going to sit in front of my computer another 15 hours and do some trading. So Jim's like, I have a printer. And this looks like someone just printed it. Some back office. One of them was good and one of them was cheap. My Harvard degrees are nice. Anyways. So I got to go, yo. It was real. Peace on earth. May the pips be with you. May your profits be above average. Later, Gator.